Hi again traders, welcome to another video. I'm just sharing my thoughts on the Great British Pound against the Japanese Yen. I start my analysis always on the monthly time frame. I work down, it's always top-down analysis from the monthly time frame, looking at it then on the weekly time frame, then on the daily time frame, and then I'll also do my entries then on the 4-hour time frame, subject to the right specification being met. So if we look at it on the monthly time frame, it's going back many years, right back to the late 90s. We can see at this particular level here, area of monthly interest, generally quite a reaction for the most part, not always guaranteed, but we can see signs and quite a bit of evidence of it being quite often when prices moving up from below has been generally resistance, and as price breaks back above it, some sort of support. Always, it's not actually guaranteed, but you can see there's generally a pattern there of the way price is moving around that area and hovering into it. There we can see price touched it and pushed higher. Obviously at this point it might say, it just fell straight through it like a hot knife through butter. Well, yes it did, but we can see for the most part there is some sort of a reaction there. I think that was about 10 years ago, 2015. We saw price push against it for about 2 or 3 months, and then it was taken out by bearish engulfing and price melted away lower. Over quite a period of time back in 2020, there's always been steady recovery of the pound against the Japanese yen, and again it's got to this very important key level, did actually break through it, and then I think it was around about July last year there was a clear shift between buyers and sellers with this particular currency pair, and it didn't even act as support, it just fell right below it. There was a sort of recovery, you can see a pin there and back-to-back dojis on the monthly time frame, but clearly price has actually stalled at that level. So that's first point of interest on the monthly time frame. We can see there's obviously a reaction at that level, it's pushed above it, broken back below, and it hasn't actually, there's no evidence at the moment that it is acting as support at the moment. It's actually price is below that level. You can see it touched it very much there 10 years ago, and now it's clearly below that particular level, bang up to date where we are today on the monthly time frame. So we'll drop down to the weekly time frame, and we can see that again this important level. I'll get rid of it now, but if you can try and remember where that is, because it's going to get rather confusing keeping it there. So yeah, I've drawn in these weekly areas of interest. We can see price pushed up, and if we look at that point where price was at the lower level of the weekly areas of interest to the highest point, I'm not going to count all those candles because it'll take ridiculously far too long, but we can clearly see the amount of candles there and the amount of time it took to get up to that point, and within about 4 or 5 candles it gone right back down. And so we can see very impulsively price move lower, correctively pulling higher above that level, and then a big sell-off. We can see some sort of recovery. There was quite an impulsive candle there pushing price back up, but again we can see price running out of steam, reached the highest level of the weekly area of interest, didn't get anywhere near to taking out the previous high, and then price has been falling back ever since. It's almost like a double top there, but not quite, and it didn't take out that previous swing high. It's actually fallen lower, and it has actually clearly taken out the previous swing points to the left there, and there has been a sort of recovery now in the last week or so, but it's getting quite well, we'll see how it is on the lower time frames. So that's on the weekly time frame. We can see, as I say, it's clearly, to me, my mind, it looks like it's losing momentum now to the upside, apart from that last candle. So this is where we've got to be a bit careful to see what's going on. So looking at it now on the daily time frame, we can probably, the furthest part we want to go back to that pay careful interest is this part here. This has been moving up in corrective in nature, and this is obviously a zoomed in part that I was showing you just now. We can see many candles to the upside. If you look at the type of candles they are, a lot of dojis, a lot of pins both sides of the candles, there's a certain amount of indecision. It's clearly moving up in an ascending nature, it's moving up in a corrective nature, and quite hesitantly. And make a careful note of the volume, the number of candles there are, and also the size of the candles there are, compared to the style of candles to the right moving lower. It hasn't taken out the last swing point just yet, but you can see much fewer candles, much longer candles, much more decisive. There's been a clear shift at that point. That was on 30th of December, right bang at the end of last year. There was a clear point of change then of balance versus buyers versus sellers. You can see at the moment it is clearly sellers are favouring the GBP at the moment and pushing it much lower at that point. There was further recovery and forming leg 2 of this wave, and again we can see as it's moved up, one or two of them are quite powerful, but for the most part again it's quite corrective in nature, and then we can start to see it picking up more and more steam, falling lower. It took out the last swing low looking left. At this point though, we are seeing recovery, and we're having to be a bit cautious here because we can see the today that this candle today that's still forming on Wednesday the 12th of February has showing quite a bit of push to the upside, shall we say. It has actually touched the 0618 level, which is the very first point of interest now of how is there a reaction at that point. And yes, there is a bit of a reaction. We can actually see a bit of a wick forming, and there does seem to be a bit of a slowing at this point in time. This is now, as I'm recording it, it's just after 8 in the evening, so we're not quite a spread hour yet, but we can see a certain amount of deceleration at the moment. So we'll drop down to the 4-hour time frame, and again this is more zoomed in again. We can see price has been pushing quite high, quite forcibly going higher, but I'm still quite interested in this for a sell. I will be cautious. We have major news announcements tomorrow for the GBP. I think it's gross domestic product at 7 o'clock tomorrow morning, but I am eyeing this as a potential sell. It's, as I say, overall looking at the higher time frames going down to the 4-hour, to me it's looking like it's waning and losing momentum to the upside. At the moment though, the last few hours it has been quite impulsively moving higher, so I really want to see good clear evidence of deceleration at or beyond the 0618 level. And ideally it'd be good to touch the daily level, which I've drawn in. I won't go into all that, how I draw that in, but it's very straightforward. But it's really clearly an area of quite a bit of interest, support, resistance on the daily time frame. But even if it doesn't touch that, I can still quite easily get into this trade if the further conditions are met and we can see a clear deceleration. Again, wait for the major news announcement tomorrow. I want to see 3 candles tapping into the 0618 Fibonacci retracement, and then one bearish or trade directional candle then that's indicative that the trend is resuming and taking on forming leg 4 to 5. So yeah, we'll have to see how it plays out. As I say, I won't be getting into this for now tonight at this time of night. Wait for the major news announcement tomorrow, and people will be saying, well, how are you going to get into it tomorrow? Well, it's the same as I always do. I will wait for a shift of structure on 15-minute time frame. That is where it'll be forming a new lower high and lower low, and then a retracement into that level, usually past the 50% level. I'm measuring Fibonacci and look at see how the structure is forming, and if I can see a clear evidence of shift of structure on the 15-minute time frame and clear deceleration, looking at the price action of the candles, I will be getting in on a trade. And as I would normally do, I'll have a buffer at the previous swing high points. That's down to personal preference. You know, I don't give people advice what to do. I say this isn't financial advice, but depending on the currency pair, I will have roughly between 8 and say 30 pips buffer. GBP JPY does need quite a bit of a buffer. Sometimes it can move a bit, so I'll have a reasonable buffer for that and respect that. My TP will be set as it always is on the daily time frame with the fibs measured out. It'd be set at the minus 27% Fibonacci extension, and I will be trading the stop losses on the last lower highs as price moves down once it forms a lower high, breaking away from entry. So yeah, that's just my thoughts on the GBP JPY. Certainly won't be getting in again this evening. See how things shape up tomorrow, guys, and yeah, there might be a potential trade opportunity. Looking at a few other pairs, there seems to be a similar pattern forming, though this seems to be the cleanest on the GBP JPY. On the Euro JPY, I've seen there's a similar slight setup. It's not quite so clean, and we've got one on the AJ. This again is quite a bit more messy. I wouldn't really probably take that because it has been ranging leading up. It's more of a trend continuation, but it's not very clean. I wouldn't touch that probably normally anyway. That one, the Euro JPY, looks quite a bit more interesting than the previous one, but not quite as juicy as the GBP JPY. So yeah, I have to see how things look. But the first choice for me is at the moment the GBP, JPY, as I think it's the most cleanest. But again, that's down to personal preference. You'll get traders who'll be looking at those and say, should have gone for the Euro JPY. Why didn't you go for that? Why? You'll see something I didn't see, no doubt. But that's trading for you guys. Anyway, not trading advice. It's just my thoughts and just sharing out there for people to learn from. And yeah, just see how things go. Anyway, catch up soon. Bye for now, guys. Bye-bye.